Hey, welcome everybody to the 40 Finance channel. Back after a couple days off. I had terrible allergies here in Cincinnati. Pollen count is like 4,000. So it's very annoying to hear me talk. More annoying than usual. So thought I'd jump on a live stream though, try to get back into action. Hope everybody's doing well. And while I was away, frankly, starting to think about the stock market a little bit over these past maybe 14 days, something like that. And to me, it's boring. It's a very, very boring market right now. And as the title suggests, I see nothing but a lot of sideways action. And it's just not enough to get me excited to really do much of anything in terms of buying stock. So we obviously have some all-time highs across the board in certain sectors and in certain stocks. And at the same time, the stocks that are going down don't really seem to have a floor yet. So I feel like I for one, am stuck in the middle where just take maybe Alibaba as one. It's going down, but the news keeps getting worse. It's hard to feel good about buying into anything over there and Macau, all those developments. It's hard to feel good about that, not knowing if the floor is near or is there more coming out. And on the flip side, if we got into the heavy hitters here still in the market, just pick maybe Shopify, Melly, Nvidia, whatever ones you want, they're still at all-time highs. So it's like, do you want to get in at that top? That's really what I'm struggling with. I'd like to see a move one way or the other. At this point, I would hope that the move would be down because I think that there's more risk to the downside in the current environment. But today we'll just pick off a couple stocks, answer questions as always, and just kind of go through this and tell me what you think about this, what I'm calling a sideways market. And to support that, I'll just pick off a couple names. I just looked at Disney before I came on here, and here's a company that, in my opinion, I don't own Disney stock, but in my opinion, they've had a pretty daggone good 2021 in terms of developments and the parks getting back on board. But when we look at it from a chart perspective, it's flat across the line. And let me bring this out a little bit. There we go. So what are we at year to date? So 52-week range, it is up on the 52-week range from 177. Do they have year to date on this one? They don't. Okay, well, let's just go year to date. So Disney on January 5th was $178. And you rode the roller coasters up and down, and here you are, a whole $4 ahead of the boat, right? Let's take a look at Facebook. Now, Facebook's made some good moves from 270 to 368. Now, with Facebook, you could make the argument that they were very undervalued coming into this new year. Amazon, here's a stock that I do own, relatively sideways, $3,200 on January 5th, got as high as 37. Here we are at 34, which is a notch under what they've been doing recently. Apple, a lot of discussion about Apple in the market and which way they're going to go. They started the year at 130-ish. You're about maybe 10% up on that, as high as 155 down to 146. I would argue that Apple even perhaps has a little bit more room to go down in the short term. So those are just a couple. Let's see where we're at with, let's see who's trending today. Microsoft. Microsoft's had a great year, and they're up big. So they're up big, almost $100. So kudos to Microsoft folks. Intel, of course, has had some ups and downs in terms of press conferences and whatnot. I think they'll get it together long term. But for as many, I would say, positives that Intel has had with the new CEO, etc., they've bumped up here, and now they're basically flat for the year, up about $4. AMD started the year at 92. For as many AMD headlines as we've read, we're up, $12, and quite possibly on the downside of a slide to the downside. So it's really, for me, it just feels sideways. Here's Tesla, 729 to start the year. Now you're at 743, and all the good things that people say about Tesla stock. So I don't know. In my opinion, it just doesn't feel like we have a direction right now. And I think that a lot of that is reflected in the kind of political, socio-economic factors that are going on. I mean, besides coronavirus, Delta variant, we also have the end in stimulus, I think, is coming up here, or certainly the mortgage moratorium. We still do not have jobs being filled. I saw a headline yesterday that we are 5 million new homes away from meeting capacity for the demand of new homes. So there's some weird stuff going on. It definitely feels like a crossroads. And I'm not talking about crossroads like epic market crash, lose all your money, stuff like that. China's another thing that obviously is weighing on the market. I'm just talking about a sense of direction, and I really don't feel it right now. So maybe you guys do. Let's take a look at NASDAQ for the year. NASDAQ as a whole, up pretty good, 3,000 points. How's QQQ doing for the year? Let's see. Not too bad for QQQ. So indexes, at least those two that I picked, are doing fairly well. Let's look at ARK since it's right here. ARK year to date on the big growth stocks is actually down year to date from 124, saw a peak of 156. Now you're at 116. This is an ETF I hold in my retirement account, and no, I'm not interested in selling it. It's just one of those ones that you write out the good and bad. So let me know what you guys think there. I'm looking at the comments. John Spencer stopped by. How you doing? Black Andrew wanted to get your take on TSM. Holding for a while, just doubting it's got much further. I hold TSM too. I am not interested in selling myself. I think the only negative for TSM right now is what's going on in China, quite frankly. So let me bring this one out a little bit. TSM's EPS and sales reports keep getting better, projections, I should say. Let's take a look at year to date. Here's another flat one, 112 up to 121. You do get that 1%, 1.5% dividend on today's price. And I know what you're feeling, Andrew, on this one as far as the news doesn't necessarily come out hot and heavy, but can I show you where analysts are projecting? So this year, plus 25%. Next year is supposed to be better than this year. Now, it's just a revenue estimate, but what has intrigued me, and I've mentioned it before, this plus 35%, for all the press that you'll get for the little companies, I don't know, Tattooed Chef or something like that, the very, very small companies, and their sales are going up 50%, they're doing 34% on $56 billion. That is amazing. 56 to 76 is a huge run up. And if I remember correctly, how this is going to stack out, the EPS, I see pretty good EPS growth here. 339 to 405 to potentially 480 next year. And with TSM, The EPS, I'm guessing, is not going to grow as quickly as revenue, mostly because they're opening new factories, or new foundries as they call them. So we have Arizona here in the United States. I think all of these are a couple years off. I read something about Germany, and I also read something about another facility in Taiwan or in China. So I still feel really good about TSM. I would argue, you know, is TSM NVIDIA from a growth standpoint? Maybe not, but I think that the floor for TSM is a lot lower. I don't think it's nearly as overpriced. Let's take a look at where we are today. Forward P of 26. Yes, it's a lot more than you saw in 18 and 19, but I'll argue that it's mildly warranted only because the future of chips has changed so much. Now, could I see TSM going under $100 in a market correction? I absolutely could, but I would assume that market correction would affect dozens and dozens of other stocks too, so it's all kind of relevant. I'm holding, but I understand if you're getting bored as well. Andy's here. Did you buy any crypto? I bought some Ethereum. Andy bought a lot. It has movement more than the stock market, and I agree with that sentiment. And I think that's what's going to get really interesting about cryptocurrency is if people are anywhere near bored like I am right now, crypto offers a lot more volatility, which is if you're in that game, then that's what you're looking for. Volatility gives you opportunity. And I am not a crypto expert, but we see Bitcoin here, 32,000 to start the year. Looked like the peak maybe in April of 63. Now you're at 48. I have a few Bitcoin. But I've been mostly focused on Ethereum. And again, don't follow me in this space because I am not an expert. I'm just doing what I think is right. Ethereum went from 774 to 3,500. And the super duper simple reason that I picked Ethereum as one that I've been buying is because I see it on websites. I see people doing transactions on actual websites. So that's my dumb guy on the couch approach to cryptocurrency. And I've been buying it, separate account in Webull, but I also have read a lot how you're supposed to own the coins, standalone. You don't own them in Webull, you own shares of them. So, but Andy, I hear you loud and clear, and it wouldn't surprise me if a lot of money leaves the stock market, certainly on the retail side for the crypto market, because that's where the volatility is right now. And without volatility, it's really hard to buy, in my opinion. It's hard to buy for the long term unless you can wake up some days and catch some different news feeds when everything is just positive, going up, going up, going up. From my standpoint, there's a lot of risk to the downside. I don't mind that stocks go up. I cheer for them to go up, but not for however many months we're on this game that we're on right now. So hopefully that makes sense. Aaron Schill, how you doing? Abel W bought very small Facebook dip over the last few days. Seems undervalued, and I increased Facebook. I don't think you can go wrong with Facebook, particularly if this world of AR and metaverse and stuff, if that starts to ramp up, it looks like Zuckerberg is right in the mix, and he has targeted that. I can see it. I'm really too old to understand it. I don't do a lot of PC gaming, but I can see it in my own children and stuff, how that world might exist, at least from a leisure standpoint, right? Maybe not the whole world goes virtual, but I can certainly see people logging in for the day to certain environments. All right, Malmsten Greece. Please tell us about Nike, Microsoft, and Visa. Since we're on crypto, I do want to talk a little bit about Visa, because this could be one that we saw. I was going to say flat for the year. Let's see where we're at. Jan 4th, you're at 217. Today, you're at 222. And I'll tell you what's going on with Visa that's interesting. And Visa is, I believe it's my second largest position right now. And they've got some pressure on them. Okay, I do think that cryptocurrency is putting some pressure on Visa for the long-term window. I don't think it's an abundant risk right now because we still don't know how federal regulation will or will not affect crypto. But anytime people are not paying with credit cards, that's bearish for Visa. And we've got several scenarios where that's happening right now. Number one is business travel, and that is a killer for Visa because anyone who's ever gone on a business trip or has a traditional career, you know that you ring that plastic all day long on the corporate card, right? Whether it's lunch, Ubers, hotels, doesn't matter. Visa's missing out on a lot of travelers there. Number two, we have recreation travel, which has obviously made a big comeback, but it's nowhere near 2019. So they're losing a lot of transactions there. And if you were going to say go to Disneyland with your family and maybe you decide, I've done this before where I get all the points, right, for the whole vacation, the hotel, whatever, I charge the whole thing and pay it off when I get home. There's less trips to Disney World, maybe not in this past summer, but people who maybe would have thought about it into Christmas time, whatever, I don't know. With coronavirus, I just don't know that that's going to happen at the same velocity. So Visa's getting squeezed, and then outside of cryptocurrency, we're starting to see other payment methods kind of pop up, right? Whether it's Venmo, Cash App, etc. Now, do I think that there is inherent risk of Visa as a stock to go down in, let's just say, 3 years? I don't see that. I don't see that. Keep in mind that Visa, beyond card transactions, the way they've set up their rails system across the internet, or not even across the internet, across the entire financial industry, more than likely, someone will have to interact with the Visa rails system to get money from one place to the other. All right, so for example, my other top holding PayPal is never just going to wake up tomorrow and not need Visa. Okay, that's just the way the tubes are set up underneath the pavement, right? So I feel good about Visa. I do think that the growth story, recovery story with COVID is taking longer than even I projected. I'm happy to be patient. But you see, even right down here, let's go to skip ahead to revenue. Plus 10% this year in 2021. Next year, 19%. I would say that I would hope that comes in low, but in the environment that we're in right now, I'm not sure that it will surpass 20%. And that's not, frankly, good enough for where they were trending prior to COVID. So that's a lot of thoughts on Visa. At the end of the day, I'm holding. Average cost basis in the 180-ish range, something like that. And it's not going anywhere for me, but I can understand why some folks would feel maybe compelled to look for something that's going to grow faster. I just think, again, the floor for Visa is much higher than some new finagled idea like buy now, pay later, whatever. The ceiling for buy now, pay later might be higher, but the floor is much lower. The floor could drop out of that game at any time. Most likely with regulation. All right. Let's see. You also asked about Nike and Microsoft. So Microsoft, I don't know what to say about Microsoft except, buy the dips when you see them, hold it for 10 years. I just don't know how a company can do any better than they're doing. Is there risk to the downside right now? Probably, just because it's burning so hot. You see this forward PE at 33x. If we went back to 2018 and 2019, you probably would argue that it should be in this range. But, close your eyes and buy the dip on Microsoft and expect to hold it for 5+ years. It's the only way. It's just like a house in a way with a stock like Microsoft. If a house is going to be your residence, normal times, most people would say that by the time you pay closing costs and all the stuff that goes into moving, you really need to live at that house for 3 to 5 years before you can start talking about a total return, right? The price of the house might go up, but the total return and expenses of not only moving into the house, but moving out to the next house, usually it's a 3 to 5 year game. Super normal times, it's more like a 5-year game. All right, and then Nike, I saw some negative headlines for Nike insinuating that their supply chain is at risk because of COVID. Don't know how true that is. This is a stock that was 140 in January. Today you're at 156. I don't particularly have an interest in Nike myself, but this 10%, let me scroll it up here. This 10% growth, I think, happens for a long time with Nike, just the nature of what they do. But to me, it's not attractive right now at this particular second. If there was a market correction, maybe I'd consider it. It just, I want double-digit growth, ideally on the EPS and the revenue side for a stock this big, and Nike's just barely getting it. Just barely getting double-digit growth headlines for next year. All right, Andrew is back, going back to our TSM conversation. He's planning to hold TSM, just like you said. It's getting boring, but so are most other stocks, man. And I think, Andrew, I think recognizing that other stocks are doing this will help you survive a little bit on TSM. I guess in my mind, you look at things and you say, what's the next opportunity that has a similar safe zone, right? And I don't know if there's too much better than TSM with when you incorporate the safe part of it. I think it's a relatively safe stock. Now, I could wake up tomorrow to China, invading Taiwan. I understand that. Right now, I don't see that on the radar. Big P, have you heard about BlockFi? You get paid interest on your crypto, and you seem to have more than I do. So I have heard about BlockFi. I just wanted to get my lips right on that one. Here's what I'm worried about with BlockFi and so many others. Let me see if I can find this for you. Coinbase. The government is coming down hard on these interest-bearing crypto accounts. So let's see. And they're also, I know that this is not BlockFi, this is Coinbase. But I wanted to show you guys Coinbase lending. Right here. TechCrunch too, so that's good. Coinbase, according to the CEO, the SEC is threatening to sue the crypto exchange if it launches its high yield generating product called Coinbase Lend. Coinbase wants to compete with popular DeFi products such as Compound and Aave. Company wants to operate a lending pool focused on USD. Okay, long story short, BlockFi looks interesting. I don't know how long that interest-bearing account thing is going to happen. And so knowing that's up for concern, I get concerned of what will happen with BlockFi. If they can no longer offer those things, is the company, worthless at that point? And crypto has so much fraud. That's the only reason, Big P, that I haven't gotten into it, but I have zero experience. Andrew asks, what's your favorite dividend-paying blue chip? We were at Visa. That would certainly have to be up there. Let's see. I also have, this is just my stuff, TJX. So I'm not like huge on physical retail, but I do love my TJX stock. It's probably one of my oldest holdings, and they do 1.5%. And it's a really good play. It's not $1 million play. Let's see how flat they are for the year. $66 to $69. But out of all the retailers in the world, TJX is making money and they're expanding internationally. This 50% sales growth is kind of a BS number based on how many closures they had last year. Single digits next year, but from an EPS standpoint, you'll notice with TJX, they keep pretty good books as far as deriving a profit. And one of the reasons that I stuck with them through the hard times in COVID is I think there's a bull case in there about how many retail stores closed and or will close here soon, and how much inventory they can buy up for pennies on the dollar and hopefully sell in their store. So I don't know, TJX, is it going to be on anybody's like blue chip, 15-star list? Probably not, but I like it, and I like Visa as well. Big P, the biggest PC gaming stocks for me, AMD and NVIDIA. I don't think you can go wrong there in the long term. Absolutely not. I think both of them have some room to the downside in the short term, but, what are we, 8 months up in a row? What platform am I using to look at these stocks? This is Yahoo. I do have a Yahoo Premier or whatever it's called account, Yahoo Finance Plus, but I don't think you need it. They're moving a lot of stuff to Plus, which is, unfortunately, it's like $35 a month. I'm on it all the time, so I don't mind paying it. But I would say, shop around. There's more than one place to find it, find this stuff. But the best part about Yahoo Finance, in my opinion, is if you like historical statistics. So if you like to look back in time and see what was a stock trading for from a valuation perspective, you're not going to find this information. I have yet to find this information on almost any other website. So who is this again? TJX. So this goes back and it's split adjusted. So I pay my $1 a day. A lot for this. They also have a really good analysis view as far as what analysts are doing. I do cross-reference it a lot with TipRanks, which is one that I sort of promote on this channel. It's also, though, it's not free. That's the problem for you guys. If you're not a big investor, I don't know if I would blow $350 a year on TipRanks, but it helps me to sort of do this channel, and I have enough in my investment account to kind of warrant it, just to make sure I'm keeping up with stuff. Like here's a TipRanks view. Where TipRanks beats Yahoo, in my opinion, is how they break out analysts on like a daily date basis, right? So you can see when the buy signal came in. They usually have a link to like the interview or the press release over here. And for me, they track these analysts and they give them a star rating. I've never backtracked it, but I always sort by the top analysts, right? So these are folks that only have 4 or 5 stars in TipRanks system. I disregard basically everyone else who's going to have 3, 2, 1 star. And maybe I'm missing some good people, but like this Scott Devitt, this guy covers a lot of stuff. I mean, a ton of stuff. He's sort of like a, I don't want to say personality, but he's been around tech and e-com for quite some time. And you can see here, like, let's see, Etsy, he's rated this stock 35 times, and you can get a feel for his track record. So if you like him, right, which is, you know, basically an opinion, you can say, okay, well, Scott says buy TipRanks, or excuse me, Etsy on August 4th. Does that even matter? Like, who gives a shit, right? Well, you go back and you see he was preaching hold here, and it did eventually go down. Then he's preaching buy, and it went up. So I don't know. I mean, it's one stock, it's one analyst, but I like to see that view. I like to see people held responsible for their picks. I certainly come on the show all the time here and tell you, you know, ones that I've thought were duds or studs that never turned out to be. That's part of the game, and I think honesty in this world of stock market analysis is hard to come by. Very, very hard to come by, and that's unfortunate because I think retail investors get suckered in by stuff, and then they do buy, and then they get stuck with it. Always have your own opinion, is I guess what I would say. All right, what platform? Oops, Able, Facebook, AV, and VR would be great for medical training. Good call, especially training surgeons. AV, VR, widely used in any field. Absolutely. I did own Unity software, which is, they're kind of getting into those areas too. I like Unity. I really do believe, though, that there'll be an opportunity to buy Unity software for $100 maybe one day when this market goes down. And it won't be because the company isn't good. It's just its fundamentals don't support, you know, plus 25% every single day. William J, PaySafe, great buy at this level. I'm watching PaySafe. Unfortunately for me, speaking of retail investors, I bought into the PaySafe hype when it came out in SPAC land. And I like the company. It was a miss on my part, though, understanding what premium I was paying for a SPAC stock. And when it did drop to $8-ish, the spread on my hold, if I had it at 14 and the spread was down to $8, I knew one thing, that I'm going to sell. I'm going to book my tax loss. But you are absolutely right, William, that it is starting to get intriguing, and I think I said it on the last, what's it called, live stream, that its numbers are going up, its projections are going up, which is a really good sign. So here we are at 820, and look at this. So here's one that, again, it's really hard to get excited. I don't know where the floor is yet. There, you know, every day I wake up, it loses 0.43%. Where is the floor for PaySafe? You know, next year, if analysts hit, they'll make 11 cents a share. Sales are in double-digit range, so that's a plus, but it is 12%. Now, I liked them because I like sports, America's Sportsbook and sportsbook activity in general, being bullish on that trend in the stocks, and they have a relationship with DraftKings, which I own. But I would understand people bought it here, but I don't know if this is the bottom yet. It's hard to tell. Justin Bieber's here. Holy cow. Are you still holding Palantir? I certainly am. And if it goes, I would buy Palantir in the neighborhood of $20-ish to try to lower my cost basis. And then I'm holding Palantir for a long time. It has, it has holes in it. There's a lot of shares out there. There's a lot of big expectations out there. But I really do like their products, and I've spent a lot of time studying their products and their industry through their investor report. And yeah, I don't see that I would get rid of Palantir. I'm trying to look at the screen. Started the year at 23, you're at 27. If we got another May, 14th dip or so, you could see under 20 again. And I would add more at that position. Analysts are starting to catch on to this one. EPS is always going to be a struggle with this one for another few years, but we want to be down here in revenue. And you're at 38% this year. I probably would say this is a low bar, plus 29% for next year. I think I see another plus 30-ish percent for them next year based on the contracts that continue to come in this world. Fly on the wall, what are the chances of a stock split at Amazon? What are the chances? Well, I don't want to say 50-50 because that's lame, but I thought that they would have done it a few months ago. I think the chances are good over the next 12 months. Especially if we get to $4,000, which is what I'm projecting. But, we'll see. I can't believe how long they've held out on this. Skytan, Coupang, please. CPNG. So it's Chinese stocks, so I don't really invest in those. But let's take a look. Is this one melted down? Let me make sure it's Chinese. Okay, it's Korean. South Korea. A little bit different. Year to date, 49 down to 28. We got no analyst opinions. It probably doesn't use GAAP reporting. I'll give you the tip rank. I don't really have a opinion on it. It's not one that I track myself. CPNG. I'll give you a free preview here. So on best analysts, there's only one that is a 4-star or higher. Last month, James said hold, price target of 40 at 38%. That, I think, proved out to be wrong. So you may still have a little ways to go on this one. I wish I knew more, but I just don't. DocuSign. What do you think of DocuSign? Love the company, love the future of DocuSign. I'm not on board at this $300 range because I think that it has a lot of, let's just call it bloat in it. And I think that you could get it for cheaper eventually. However, if you bought this one at 180 back in May, even, anything under 200, which you could have got not even in January. You could have got that in March, you could have got it in May, and you could have got it in June. Under $200. Will it go all the way that low again? Maybe. But that's where I'd start to pick it up. You can see this EPS really growing strong, potentially $2.15 next year. And the best part of DocuSign is, of course, this growth. Now they're into the billions of dollars, and yet they're still producing plus 30%. I like it. I don't think it's the biggest moat of all time because it could be replicated. But I like the company, the stuff that I've read. They've got some really cool stuff coming out and being innovative in the space as far as contracts and whatnot. I just can't get into it at 270, but if you already hold it, I would continue to hold. I see good things in the long term. Justin has Affirm as a swing trade, or he's heard folks talk about it. I just did an Affirm video. I would argue in the 90s is probably where I'd see. Right now, this news is so hot on Affirm, right? Like, who buys it? Now, swing trade's a different game. Hold on, I'm trying to adjust my screen here. Swing trade is a different game, but the way I would do swing trade is much like a rebound, where I'm buying low, say here, May 12th at $50, July 30th at 56, basically prior to the earnings call, 67, and then I would have bailed at 108. So if they're going to do a swing trade, I feel like that opportunity's been missed, but I'm only looking at it from the standpoint of, you know, a stock that's down low goes up higher. I never do this, but I would be interested. I think you could make a case for a short-term short on this one, only because it's run up so much. Would it come back down? The market's at all-time highs. It's run up out the wazoo. Not something I have any expertise in, but I could see a short-term short on this stock. I just don't short stocks. Lion's back with LSPD. Hold on. They did a name change from POS to Ecom. So Lightspeed is something Lion's been in, and to his credit, I assume it's Lion's a he. To his credit, it took off. He's been on this these chats talking about Lightspeed Commerce instead of POS, as you called out. Who knows when? But he has seen a nice boost. He was in the comments the other day, and we were sort of laughing about it. So good for him. What's left in this one? Hard to say. If I just don't have enough information about it, but I'll make some broad assumptions from the comments here from Lion, is that maybe they're going away from point of sale at store and getting into cart and more digital activity. If that's the case, it certainly improves their runway. No analysts cover this one. Let's see if TipRanks done any updates. All right, you got some coverage here. It's another reason that TipRanks comes in handy, because it follows individuals. So when Yahoo screws up and doesn't pull in the right data, perhaps because of the name change that happened, you know, you got this backup, which is arguably in much more detail anyway. Let me squeeze this in. So 13 days ago and 8 days ago, looks like the 120-ish price target aligns with what most people are saying. So this is a good one. I'm going to make up a scenario, and I'm going to say that Lion, I have no idea what Lion bought this at, but I'm going to pretend he bought it at $57. So what do I think of Lightspeed Commerce if your cost basis was $57? I think it's great. And they obviously are compacting on on good news, compounding on good news. And so I say hold it and let it run. You hit it. It obviously has risk in it, maybe around the $100 mark to go back down on a negative day. But if you're in at $57, like, who cares? Just keep holding it as long as the news continues to look good. Now, if the same another person walked up to me and said, I have $120, is Lightspeed a buy? I would say, from my vantage point, well, it just ran up let's see, today is September 15th. Last month on August 19th, it was $90, and it added $30 more. Do you think in the short term that it will go up or down on that action? I would say you missed the boat, wait for it to come down again. Wait for it, and it's not going to go to zero, but wait for some negative news. Do your research during this time period. Make sure you really like the company and what they're doing. Wait for a downturn. You can see on this year-to-date chart, you don't have to typically wait too long. Here's January at 67. If you woke up on March 8th, you could have saved $13. Then you saw some upticks, and then back here in May when the market corrected, 55. So you've had your opportunities. I don't think 120 is the time to start a position, but if you're lying and you bought at 57, then hell yeah. Hold and hold longer. William on Zillow, I'm a buyer of Zillow. Just started a position a month or two ago. And I will continue to add. I have not built that out. It's only like 10 shares. I think there is room for Zillow to go down even more, believe it or not, because the media is absolutely obsessed with the demise of real estate. I don't know what the hell their problem is. The media wants real estate to fail. I'm very convinced of that. But I'm also very comfortable with Zillow's business strategy and what they're doing. And you can see here that Zillow offered an opportunity. I wonder if this is a 52-week low. 52-week range for Zillow, $86. Today you're at 91. They've done good things this year, okay? They've added good things to the company. The company is growing. And yet you have an opportunity today to get in $5 off the 52-week low. And here's what you're looking at. So EPS is really not a thing. With this one, 97% revenue growth, 48% revenue growth. So whatever other investors did over the past 52 weeks, if you woke up from a very long nap and you got $5 extra, you can have Zillow for the exact same price that it was almost a year ago. That's not necessarily stock analysis, but I'm just saying this company is growing and I like the price right now. And you figure if we did have a market correction, I expect it to go down even more into the 80s. It could put, I think the fair value on it from Morningstar is in the 70s, $75 or something. So there's an opportunity here. Keep it on your radar. As far as C Limited, I've looked at it dozens of times myself. I'm intrigued. I don't know why it just strikes me as too good to be true. I don't know why, but that's just me. It has performed unbelievable. Look at this 1-year chart, 147. So you're doubled up, more than doubled up, which is phenomenal. They continue to produce new revenue streams, getting closer to profitability. Look at these revenue targets, plus 50% next year. So here's what you could see from C. In terms of a buying point, right? We are still in 2021. Most analysts here in September are still super duper focused on them landing the year here at whatever it is, $9 billion. So that would be plus 100% growth, super headlines, rah, rah, rah. Next year, this is phenomenal, 50% growth. It will be slowing growth. Okay, so anytime you hear slowing growth, which is probably going to be about every stock in the stock market this time next year, you will see the multiple come down. Doesn't mean that the company sucks and it's going to zero. You're just going to see the price multiple come down. It's just the way it is. So I think you have opportunity in C to be patient. How many dips have they had this year? March, 197. That mid-May when we had some weakness, 202. Not sure that you'll get there again because of how high it's run up. But, you know, I could see under 300. Easy. 267, yeah. I could see under 300 for sure, and potentially more. Maybe 275 is not off the table yet. But that's just my take. Time is it? All right, I got time for a couple more. Eric Lee. Do you think the Fed will taper this year? Yes, I do. I'm not an expert on it, but I do think at the bare minimum, they have to stop buying those mortgage securities. Like, if they do anything, they need to stop buying equities and mortgage securities. Okay, that doesn't mean they change interest rates. It just means active participation in the market. It's been a no-no forever, and yet we found ourselves in a unique situation with COVID. So I see them maybe finishing that program up by the end of the year. And Justin Bieber, someone's always predicting a correction. That is true. And unfortunately, I'm sort of kind of one of them, at least in this market. I don't even want a crash or a correction. I don't want people to get wiped out of money. Okay, like you see the real, the grizzly bears, if you will. They preach like epic collapse of the financial system, your dollar's worthless, all that. I am inherently bullish on stocks as a long-term tool to grow your wealth. I am not ever going to be fully removed from the stock market. I am predicting, I guess you could say, that there'll be opportunities to get prices on some of these stocks lower. Now, to be fair to Bieber's point there, someone's always saying that. And I guess somebody's always saying a stock goes up too. I don't know. But I do want to like kind of differentiate me from doom and gloomers. I'm looking for value. Okay, I'm looking for price value. Doom and gloomers, for some odd reason, they make a lot of money selling doom and gloom. You know, epic collapse, buy gold. You know, crypto is a scam, it's going to zero. Those are not philosophies that I buy into, but I do buy into trying to get the best price. Lion, exactly where I bought in. So Lion, that was a guess, and Lion's confirming that he was in at whatever, $70 or something, so good for him. Square's going to start letting people use Cash App for in-store purchases. Okay. Yeah, that's good. Square, by the way, just be careful on Square. I own it. I'm not selling it. Some of their revenue projections, whoosh, it's not as good as it once was. So you heard it here first. Now, these are consensus, so let's take them with a grain of salt. 100% this year. Next year, 12%. Now, I expect outperformance, but I saw that the other day and I was like, what? 12%? But just keep an eye on it. They're one feature away from making this 25%, right? But let's just make sure Square continues to innovate at a fast pace. Cash App was the last really big one. And then adding features to Cash App like crypto investing, huge win. But we need to make sure that they keep innovating if they want to hold this title of a high multiple stock, which they very much are. Celsius for AJ, I don't own it. It was on fire. I don't know anything about diet drinks. I know that they're popular, but I usually stay in my lane on things I do know about. January, $52. June high of 81. There's a lot of growth projected for it, but this is, this is one where you need to know. Okay, you need to, hopefully you drink it. Hopefully when you go to the gas station, you see it where you expect it to be. It's a small company. Okay, I would put this on the same plane as like a tattooed chef, since that gets a lot of YouTube visibility. You're talking about, millions of dollars, not billions of dollars, and we're nowhere close to $1 billion. But when you go from 258 million to 400 million, that's plus 54%. Okay, so that's great. But watch your multiples here. See where we're at today. Price to sales 37x, man. That's up there. That's up there. Could have got this one back, I'm guessing, before they had whatever drink is on fire right now, and you're talking about 4x, 3x times sales. So you're getting up there. If you own it, just like Lion's scenario, if you own it and you bought it on May 15th for $46, I can't imagine selling it because they're still growing. Getting in today at 90 though, I think you're probably at risk for it to go down more so than going up. All right, guys, I'm going to stop there. Good to see everybody. Lion, good to see you. Who else? Andy was here for a little bit. John Spencer. Special appearance by Justin Bieber, which is always appreciated. Aaron Schill, thanks, guys. I appreciate it. And we'll see you on the next video.